Welcome to the Beautiful Life podcast. In this series, we treat your life like an investment. Using the Iditarod sled race metaphor, we will explore strategies for building wealth, discipline, and personal growth so you can intentionally design a life that is both successful and meaningful. This podcast follows a course-style structure. We break down investing and life strategy into clear, teachable modules. Our focus is practical and structured. Each concept is designed to be applied directly to your daily decisions, finances, and long-term planning. Our core metaphor is simple. Your portfolio is your sled, your stocks are your huskies, and your mission is to build and manage the strongest team possible. Every decision you make about money and life either strengthens or weakens that team and its ability to reach the finish line. To succeed, we need a mindset shift. In this model, huskies are not pets, they are working assets. That means we detach emotionally from individual positions and focus on performance and results. We keep what pulls the sled forward and replace what consistently holds it back. First, understand how money behaves. Inflation quietly erodes purchasing power by about 3% a year, so cash loses value over time. Bonds may add 2 to 3%, while historically stocks have delivered around 10% long-term growth, rewarding disciplined investors. Compounding is the engine behind real wealth. A single $1,000 investment that doubles repeatedly can grow beyond $1 million. The lesson is clear. Small, consistent gains, allowed to compound over long periods, create extraordinary outcomes for patient investors. We must also face market reality. Most investors do not beat the overall market, especially after costs and taxes. Complex strategies often underperform. Simple, rules-based approaches, executed consistently, tend to deliver better, more reliable results over the long run. One effective approach is an ETF strategy. Exchange-traded funds are baskets of stocks that provide instant diversification at relatively low fees. By using ETFs, you can efficiently align with the market's performance and, in many cases, outperform investors who trade individual stocks. Taxes are a key part of your net returns. Short-term gains from assets held less than a year are usually taxed more heavily than long-term gains. Taxes are triggered when you sell, so trading frequently can be costly. Remember, large tax bills often signal that you realized strong gains. Emotional discipline separates professionals from amateurs. Avoid buying late out of fear of missing out, holding too long because of attachment, or selling too late out of denial. A clear plan, followed calmly, protects you from emotional decisions that damage long-term performance. Our SMART strategy follows 3 steps: identify, take, and exit. Identify promising trends early using data and research. Take profits gradually as positions appreciate, locking in gains. Exit before meaningful decline by respecting your rules instead of waiting and hoping for a rebound. We use the 10 Huskies rule to keep things manageable. Focus your attention on roughly 10 core investments. This concentration maximizes efficiency and control while avoiding unnecessary complexity. You always know each Husky, why it is on the team, and how it is performing. Rebalancing keeps your sled stable. Start with each Husky at 10% of the portfolio. When one grows to about 10.5%, you trim it back and redistribute gains to underweight positions. This systematic process locks in profits and maintains your target allocation. These principles extend beyond money. Rebalance your life the way you rebalance a portfolio. Regularly assess your career, health, and relationships. Shift time and energy from overextended areas to those that are underinvested, so your overall life stays aligned with your priorities. Use a decision framework when something underperforms. Ask whether the issue is temporary, a short-term setback, or structural, meaning the fundamentals have changed. If the problem is structural, remove that Husky from the team and reallocate resources to stronger opportunities. A monthly reset keeps you on track. First, review performance objectively. Second, replace weak assets that no longer meet your criteria. Third, realign the entire portfolio with your goals. This regular cadence prevents drift and ensures your actions match your long-term strategy. Consider growth versus dividends. Growth companies typically reinvest profits to expand, which can drive higher long-term returns. Dividend payers distribute cash today, but may limit future growth. Your choice should reflect your time horizon, income needs, and risk tolerance. Our final philosophy ties it all together. Your life is your sled, and every choice you make is a husky pulling it. Lead with intention. Select commitments that move you toward your goals, release those that do not, and steer your team with clarity, discipline, and a long-term perspective. We operationalize this system with a structured spreadsheet. It tracks each husky's performance, assigns clear actions, keep, watch, trade, or remove, and summarizes key rules and reminders. This tool turns abstract ideas into a repeatable, data-driven process you can follow. As we close, remember that consistency plus discipline creates a beautiful life. Stay intentional with your investments and your daily choices. When your actions remain aligned with your values and long-term goals, both your portfolio and your life move steadily in the right direction.